along with Tata Power, but M&M Financial, this is a vertical move now. FNO stock and sharp move is what you have. Srinivas Ravuri is joining us. He is Chief Investment Officer at PGIM India Mutual Fund. Srinivas, good afternoon. Thanks a lot for joining us. The big theme in the market is that the domestic consumption stories, they are back. Not just the FMCG names, auto names. You're seeing a lot of these stocks do well. What's your view?
Yeah, thanks, Anuj. I agree. I think when you see what's happening globally, things are much better. The sectors, companies that are domestic oriented, I think that is what is getting reflected in the stock market as well. When you see global events, there is a lot of panic, fear. I think that's what we've also seen into Indian markets. But I think in the last week or two, we've seen some kind of a consolidation and sanity in terms of which are the companies that are likely to be impacted by the global events. I think, we keep talking to our PGIM US, which think that now soft landing or a mild recession is most likely in US. And if that is what is going to happen, which are the companies or sector that will be impacted versus less impacted? And that is where I think companies that are more focused on Indian economy, Indian consumers seems to be relatively better bets to invest in.
Okay, hi Srinivas, thanks so much for joining in. Srinivas, I was just going through your portfolio and it appears two of the stocks, the larger weights, that's Reliance Industries and Infosys. I think they feature in quite a few of your funds. Reliance Industries is going through a bit of a trough now, post the imposition of duties on them. How would you approach this space? There's some uncertainty that's crept in there. Maybe the bullish argument is, anyway, you're not factoring in GRMs at 2025. Your take?
So, Prashant, without getting into individual stocks, if you see, I think the large weights, what are the plays? I think the refinery has become a relatively smaller part of the valuation. So to that extent, I'm not so concerned about imposition of duty. One has to see stock level. I think the bigger impact is on PSU stocks in the sector and overall PSU as a category. But when it comes to the other companies, I think it become much more diversified. It's more of a play on retail, telecom, than on the traditional industries, Prashant.
Okay, fair enough. Yes. So that's on, of course, some of these companies like Reliance. Looking at your own, your fund and looking at some names, it looks like you have quite a bit of exposure to the PSU sort of PSU banks. Srinivas, any reason for that? Is it a valuation call that you've taken?
So Anuj, actually we've been fairly underweight financials as a sector for last 24 months. And in the last 6 months or so, we've actually gradually increasing our exposure to financials as a sector. And the reason for that is we think the credit cycle, the NPS cycle is clearly behind us. And valuations are definitely in our favor in terms of risk reward. Within that pack, so we have 3 buckets, I would say. One is private banks, second is the financials, and third is PSU banks. And the PSU banks, we have increased exposure in recent months, as I think at least the big ones, the names that you are referring to, have clearly demonstrated their ability to handle credit cycle and also grow. I think so those things are no longer a concern. In addition to the fact that valuations are extremely attractive, they have not just one business, they have demonstrated their capability to create value in multiple business. That also gives comfort in terms of why one should be having exposure to PSU banks. Anuj.
Okay, all right. Srinivas, when I was talking about the 2 large heavyweights, you answered the oil and gas part of it. And you said that the PSUs will get hit harder there in the oil and gas side when we were referring to one of your large weight Reliance Industries. What about the other one, the IT space? Infosys is the big boy in there in your portfolios. Your view on IT, would you stick to the large cap names or do you think some of these mid cap names now are offering value?
So, Prashant, I would really prefer large cap. Within that also, I think over the last 6 months, we've actually reduced our exposure to IT. We used to be overweight. Now we are more in the neutral to underweight camp, Prashant. I think IT is in a classic situation wherein most of us investors and analysts are looking for an excuse to reduce exposure. Now, if you look at the commentary of IT companies, most of them sound very, very positive, but that entire positivity is related to the current financial year. They're saying that the order pipeline is extremely good, deal wins are good, etc. But nobody is commenting on what will happen in FY20 next year. So markets are looking at not just what is going to happen this quarter or next quarter, but next year and next year. On that front, I think there is a clear worry, fear, what will happen if there is a recession in US and other markets. And there is no answer as of now. And that's where I think most of the street is looking for cues. Who is going to comment first that there is a slowdown? We haven't heard anything negative. But I think that worry or fear will continue as the recession about in US it seems to be more or less reality. So to that extent, I think we are cautious on IT sector. Though valuations have corrected quite a bit in the last 2-3 months, still if you see where are they trading versus a 5-year average or 10-year average, still there is a bit of a premium. And when there is uncertainty, I think one need to be cautious. So within the pack, IT large cap is preferred over mid cap, but overall cautious on IT, Prashant.
Okay, by the way, the market's making a bit of a move on the upside once again, and the Nifty is now up 75 points, 16,200 is what you have, and the last bit of move is actually on account of a couple of IT names. Infosys is actually had high point of the day, and from the day's low, even TCS has recovered a little bit, not a lot, but a little bit is what it's recovered. Dr. Reddy's has made a move to high point of the day, and ICICI Bank as well. Just pull out both Dr. Reddy's and ICICI Bank. Dr. Reddy's up about 1%, and ICICI Bank really helping the bulls now, 1.5% higher on ICICI Bank right now. So big move happening on that stock right now. For ICICI Bank, in fact, we are now, if we close here actually, it will be a close above the 200-day moving average on ICICI Bank. I mean, it has been the strongest banking stock for some time now. So crossed the 20, the 50, and now even crossing the 200-day moving average on ICICI Bank. Srinivas, before we let you go, just a word on pharma. That's done nothing for last 1 year. Any views here?
We are very positive on pharma, Anuj. We are overweight across in our schemes. I think valuations have corrected as 1 year. We've seen stocks going not going anywhere, but companies have delivered earnings growth, and the growth drivers very much intact. Of course, we will see a bit of moderation in the coming quarters, especially this quarter, as the COVID is there in the base numbers, and this quarter will not have revenues from COVID. So to that extent, one can expect moderate earnings in the current quarter. But overall, I think structurally, pharma is in a great space, and we like space and overweight on the space.
Okay, all right, Srinivas, thanks so much for joining in. Nigel on this side,
Thank you.
It was good speaking to you. Thanks so much for joining in and giving your views. No worries, have a good weekend and a good evening as well. Well, on that note though, we'll have to slip into a short break.